Hello guys, welcome to another video. So today we are going to look at US 100 or the Nasdaq. So for those of you who are new on this channel, basically I just go through a couple of charts. So for today, for example, I'm going to go through Nasdaq and I use just the pure price action strategy, and then I'm just going to show you how to run through it, starting with the highest time frame, going all the way down until we get to the smallest time frames, where we'll be able to draw a conclusion and come up with the trading signals, or at least have an idea of where this is most likely to go next, so that we can be able to catch maybe a trade or two, right? So for those that are new, don't forget to like and subscribe if this is the type of content that you find valuable. But some of you, I know, have been on this channel ever since it started. It's just that I haven't been very consistent lately, but I'm trying my best to come back. So from now going forward, you must expect a new video on Tuesday, on Thursday, and on Sunday. So basically, starting with the ones on Sunday, that's where we're gonna go. Maybe I can do 3 different charts, and then we're going to review those ones on Tuesday as to like how they're playing out. Then we can maybe add one more on Tuesday. Then we're going to review everything on Thursday. Then we're gonna close it off for the week. Then we're going to start again on Sunday, preparing for the week ahead. So for now, let's do Nasdaq and see what we can find on this one. So like I said, we're gonna start with the highest time frame. This is how the structure looks like on monthly. So basically, even if you can try and scroll all the way back, you'll find that there's no information that's at this level. Like, this is the all-time highs, so which is making it, it's very tricky when you're trading at the all-time highs, because you don't have any traces to the left where you can say that the last time the price was here, this is what it did, and then you're trying to use that to try and predict what it's most likely to do next. So that's the tricky part about trading at the all-time highs, but that's not train smash. We can try and still try and make sense of it. So basically, the monthly is definitely bullish, right? And if you were to try and put a trend, or rather a trend line that goes with that trend, the bullish trend, we will have to find the points that we can use to mark our trend line. So those that have taken my mentorship before, they know that when you're trying to draw the trend line, we need to find the swings. I will try and maybe give you a lesson on this as the time goes by. I can just give you a lesson on how to draw trend lines, how to mark the zones correctly, because at the moment I don't have enough time to be giving mentorships, but I'll try and create a space. If I can't, if it's not working, then I'll have to just give you a few pointers here and there. So we need to find swings. So basically, when you're looking at your chart, you should be able to say that, okay, I can see the price is going up, but we know very well that the price, when it's going up, it's not always gonna move straight line like this. So it's gonna go up, come back, go up, come back, go up, come back, creating higher highs, which basically means that the new high that we are forming is higher than the previous one. The same with the lower lows. That's how we see that the price is going up. So when you're trying to mark a trend line in that trend, you just need to find the lows, or the swing lows, and try and join those. So in this case, our bullish trend line, we can put it somewhere there, because this one that you're seeing here, it's debatable, but for me, I would just keep it on this time frame. So if I was to do a weekly, you will probably find that being a swing. But here, because it's just congested and it's just one bearish candlestick, we can look past that one and say it's just a market pause, and then we can just say we are bullish, and then there's our bullish trend line. So now what we need to do is to say that we are bullish. The trend line we can see is there, and when the price is going up, when we are bullish, we need to try and find the structures that are that go with the trend, the structures that we can use to try and tap into the trade. So the most important ones, like I said, the first one will be the bullish trend line. So when the price is going up, a bullish trend line is very important, because that's the one that you can use to add more trades immediately the price gets to it. So it's either you're gonna go in with a limit order, or you're gonna go in with waiting for confirmation. But the bottom line is a bullish trend line is very important in a bullish trend for as long as the price does not cross and move to the other side. So basically, it's also going to show you when the trend is, it's changing, because when the trend is about to change, you will see the price won't respect the trend line anymore. That's when you can say it looks like the bullish trend is coming to an end. So that's the first structure that is very important in a bullish trend. The second one is an area of demand, or an area of, we can look at it as an area of support. So in this case, the most important, or the most strongest area of demand, or the most strongest area of support is the one that you find at the swing. But sometimes the price can move up like this and not form swings, but it doesn't mean that the only area of support you can find is this one. Sometimes along the way, during that strong bullish move, it will pause. So basically it will form what we call a rally, a pause, and a rally. So that's another area where we can see there's a lot of demand there. The next time the price comes here, it's most likely to try and react from that. So we can mark that as our area of interest, so that the next time the price gets there, we need to observe how the price moves around that, because there's a high chance that it's going to react from there. So in this case, our nearest area of demand or support is this one here. And like I said, the trend line is somewhere there. I'm not saying that you should just go and sell Nasdaq because Nasdaq is coming down here. No, that's not what I'm saying. We are saying that Nasdaq is strongly to the upside, and the key structures of that bullish trend for those who are doing the highest time frames is this area of demand and the bullish trend line. Should it happen that in the near future, on the next coming months, Nasdaq starts pulling to the downside, this is the two structures that the people that are investing in this thing are going to be targeting. So this area of demand and this trend line, that's where they will be trying to add more buy trades. So basically, when they get that pullback towards the demand and the trend line, they're going to open more buy trades, because those are the two structures that are being respected when the price is going up. So each time, like I already explained with the trend line, each time the price gets to that trend line, it has a high chance of being respected for as long as the price is bullish. I hope you're still following, because I'm trying to make it as simple as possible. So now I think that's all we need to take from the monthly chart. So now we need to try and drill down to the next time frame, which is the weekly. We're basically going to be doing the same thing, but because now I explained it fully on the monthly chart, on the weekly and going down like that, I won't be going in full details, because we're going to be doing the same thing to try and say, okay, because all the time frames are saying this, it means now when I'm there on my H1, if that's the time frame that I use to execute, or I'm on my M15, I should be trying to do 1, 2, 3, because you'll be keeping in mind, being very cognizant of the other time frames, right? So this is our weekly chart, and it's more or less the same as what we saw that side. Weekly is also bullish, right? And we can put a bullish trend line somewhere there, and in this case, the area of interest, we can keep it there. The next one, we can keep it there. So we are very bullish. So basically, because they're very bullish, every chance you get to take a buy trade, you need to take that, for as long as on that very same time frame that you're looking at, the key structures of bullish trend are being respected. So if someone is trading on weekly, if the price was to tap into that, go down like that, they will try and add a buy trade. And then because of what, it's the bulls that are in control. Just because we are bullish, like I already explained, it does not mean the movement has to be like this. A healthy trend is the one that does that, a healthy bullish trend. So each time the price gives you this pullback, that's where you're going to try and add more trades. This pullback towards an area of support or demand, or towards a bullish trend line, you're going to add more trades. That's exactly what someone who's trading on weekly is going to be doing here. But if it happens that the next pullback, maybe you're trying to add more trades, then it happens that the price breaks a bullish trend line, for instance, then you will say, okay, it seems like we are no longer bullish, because of what? For us to remain bullish, we were supposed to respect that trend line. We were supposed to respect that bullish zone, the support or the demand. The moment one of those structures is taken out, you need to stop buying, because of what? The dynamics or the trend could be changing. You see, that's what I'm saying. For as long as the key structures are being respected, you are more than welcome to keep on trading in that one direction. So let's see what we have on daily. We're most probably going to be having the same thing. So yes, so this is our daily chart, right? And the trend is the same. We know we are at the all-time high, so it doesn't have been me trying to zoom back and go back and try and find out what's happening on the left side, because we know there's nothing we're going to find, because the price has never been here before. And let's try and see. So even here, you can put your bullish trend line there. You are bullish, and there's a tiny candlestick here, which is the one that you can be interested in adding more trades should the price get there, if this is your time frame. Because remember, we don't all trade on the same time frames, so you need to pick the ones that make more sense to you, and you just focus on those ones. And we can see this is around the old area of resistance, or an old swing high. Remember, at some point this swing high was the oldest, or the not the oldest, if I can put it like that, but the highest point that the price has ever reached, if you try and reach go back. But then, okay, when the price did this, you're like, okay, maybe the sellers are trying to come in and create something so that they can protect and then try and push the price down. But the moment the price takes that out, and then that's when you can say, okay, we are creating another new all-time high, and then we are pushing up like that. And that area of support that I was talking about is located around the old swing high, which means that it's located nicely. So that's what I'm saying. Should the price get there, you can take a buy trade there if the daily is your time frame. So basically, you can see all the time frames that we have looked at so far. Everything is saying bullish, which is why I said, because everything is pointing to the upside, you just keep on adding buy trades on your time frame for as long as the key structures of a bullish trend on that time frame are being respected. The day that they are not being respected is the day that you're gonna say, okay, because the dynamics are no longer, the key structures are no longer holding, the dynamics could be changing, then I need to stop buying and just try and reassess again if ever what is happening is just a extended pullback, or if it's a complete trend reversal. But for now, everything is pointing to the upside. Now let's check H4, because remember, the lower you go, the more candlesticks you're gonna find, and the more different structures you're most likely to find. So H4 is still pointing to the upside, and it doesn't yet have a reason for you to buy, because of what this trend looks very, very overextended. A deeper pullback would be a healthy and a much safer way for us to take a buy trade, because remember, the goal or the aim is always to try and buy as low as possible and sell as high as possible. So for someone who is going to try and take a buy trade here, if they're trading H4, and someone who's going to say, no, I need to try and wait for a deeper pullback, maybe the price decides to go until there and someone buys there, right? You can see this one bought low. So if they are both going to go, and for instance, if they are both going to go, remember, one bought there, the other one bought here. If they're both going to go and target a TP being around there, it means that this one will only make this as their profit, and this one is going to make all this as their profit. That's why I'm saying the aim is to try and buy as low as possible and sell as high as possible. So in this case, a deeper pullback or a much more extended one before takeoff will be something that is welcomed, because that's where it's going to provide you with more buy opportunities, because we're saying here we are just looking to the upside. There's nothing to the left, so we can't say the price is approaching an area of resistance that we can try and sell from. There's nothing to the left, so we're gonna keep on buying at least until the dynamics change on one of these time frames. So even on the H4, guys, it's just pointing to the upside. And okay, there's these tiny candlesticks, they are not nice, but yeah, there was a pause there, which is most likely going to be around the same daily one that we saw. So if it happens that they come down, you take a buy from there, look for confirmation, and then you're just pushing it to the upside. This one is just a lot of candlesticks, so this one I wouldn't take on this time frame. Maybe it will make sense on another time frame. So let's check our H1. You see, our H1 looks like this. Does it make any sense, or does it still look the same as what we saw on the other time frames? You see, so like I said, the trend, when the bulls are in control and they are strong, they need to be forming nice bullish candlesticks like this. But the moment you start going up, but you're just doing this, yes, you're pushing up, but this does not convince me that you are fully in control. That's when I said sometimes this could mean that the trend is overextended and the price wants to recharge by giving you a much deeper pullback so that you can add more trades at a lower point and then push up like that, because this can be very tricky. Like if you look at these candlesticks that we're getting here, they are not going anywhere. Like when you compare it to this one, they're just, they're going up, but they're just next to each other. They're just here, they're not pushing up. But either way, they're still pushing to the upside. But like I said, a deeper pullback would make more sense. It would be much safer to take a buy trade from there instead of just trying to, add more trades from where we currently are, right? But the goal or the aim is to try and buy. The goal is just to buy. This is gonna, we're just gonna buy at least until the dynamics change. So far, I don't see anything. But if you are someone that's trading on, for example, H1, then you can say, yes, we have been pushing to the upside, for a while now. And to be honest, we don't see signs that we could be going to the downside, or is there any? And then we can just say, okay, the first one was that where we say we're having what you call a bearish engulfing, which is basically a sign of the bears, suddenly becoming aggressive or strong. How do you spot that? That's when you are seeing the price, the bulls going up, and then all of a sudden the sellers have a strong candlestick to the downside with their body swallowing the body or bodies of the previous candlesticks. That's when you can say the sellers suddenly became aggressive and they engulfed the previous candlesticks, or the candlestick of the previous move or the trend. That's why we're saying the bears or the sellers, they engulfed the other candlesticks. So that's the bearish engulfing candlestick. So that's a sign that the sellers could be trying to give us that strong or a deeper pullback that we wish for. We're longing for that one, because it's the one that's going to give you a nicer opportunity to keep on adding to the upside, even if it was to come maybe around here, even though it's a lot of candlesticks. But even if it was to come around there, at least it will have made a deeper pullback instead of you just trying to sell, buy when the price does this. So a deeper one would make more sense, because that's the one that's going to give you a chance to sell, to buy a bit lower. So for now, let's try and get the price to go down to at least maybe somewhere around, let's see what price is there, maybe somewhere around here, which is around, on this broker, it's around 24.33, maybe somewhere around there. It will be much better. So when the price gets there and then you've seen signs of it trying to go up again, you can look for buying trades. So now let's check, what do you call this? This is how it looks like on M15, right? So the M15 has been pushing to the upside, until somewhere around there. Let me try and use a color that you'll be able to see nicely. Which one would it? Let's go with this one. Yes. So they've been pushing, and then at some point they pushed until there, and this became the nearest area of support or a nearest area of demand. They've been playing around there, playing. What does that tell you? That tells me that as much as we are bullish, right? I don't dispute the fact that we are bullish, but these bulls are not so strong. Why am I saying that? It's the same thing that I said when I said you can see the price is going up, but if it's not giving me strong candlesticks, it's doing this. Yes, it's gaining because we were here. Now it seems like we are somewhere around there. It's gaining, but this is not very convincing. It's the same thing here. We are bullish, but now remember, when we are bullish, the bulls need to keep on forming. Like we said, it needs to keep on forming higher highs and higher lows. So the moment you're having this as your low and having that as your high, then all of a sudden you do this. You are not breaking the high, you are not breaking the low, you are not going anywhere. It seems like you're just going sideways. So that's a sign of you becoming weak now, because if you were still strong, you were supposed to break the high and keep on going. Now it happens that here they broke the highs, but they failed to go up, they failed to maintain the trend. So when they broke the high, the trend line was maybe somewhere around there, right? And then they broke their high, and then the price came back. What did it do? The price immediately came back, and then it took out the low. And then that's when you're like, okay, the dynamics could be changing. And we can see in this case, the trend line is out on this time frame. The bullish zone, or the support, or the demand, which is the one that was there, is out. So that's why we're saying it looks like now a deeper pullback. It's something that would make sense. So in this case, maybe if the price was to even try and, because this is the zone, this one, if I can try and bring it down anywhere from here to there, this is the resistance or the supply that initiated all these problems for the bulls, that initiated this move, that broke the trend line, that broke the support. So this is the one that should the price maybe, it's just that it's a smaller time frame and the bigger guys haven't changed the dynamics. They haven't pointed to the downside as yet. So if the price was to maybe reach around there with confirmation, guys, maybe get a bearish pin bar or bearish engulfing, you can take a sell and say that the price has a chance to reach at least until there. Or you can just say, I'm not interested in taking anything to the downside. I'm just showing you two sides of the story. This has a chance to give you a deeper pullback to at least somewhere around there. But you can just say, I'm not interested in that because the bigger time frames are still pointing to the downside. I would rather wait for a deeper pullback than I take a buy to the upside. You are more than welcome to do that. I'm just showing you different views to say that when you're analyzing, you need to try and look at it from this side and try and look at it from the other side so that you know how to react when the price does not play out how you had predicted. I hope this makes sense. So that's all that I can say I had for you here on US 100. So it's not just about Nasdaq. You can try and use this on any chart. It can be Euro USD, it can be gold, it can be Euro USD, ZAR, it can be whatever that you like. You can try and use the same approach. But if you find value in this type of content that I'm creating now, that I said I'm gonna keep on, give you a video on Sunday, on Tuesday, and Thursday, and then we're gonna do it like that. So it's gonna be 3 videos a week. So you just need to know that, keep in mind that on these days around 8 p.m. South African time, there's going to be a video that I'm going to upload. So you need to make sure that you if you have watched this far and you like this content, you just subscribe and hit the bell icon so that whenever I make a new video, you'll be notified. So yeah, that's what you can expect from Nasdaq. I will see you guys in the next one. Thank you.